Welcome back to another episode of the Anatomy of the Trade. Today we're going to go through the market outlook, and before we go forward with it, I just want to say that as we're recording this session at the beginning of July, um, we are going to go on a break after this week, but we have recorded enough material for you to have a couple of more, three, I don't know how many we have, sessions of the anatomy of the trade. And then we will come back probably into the end of August. So we just want you guys to know, because we know that, we have our own small following, for the people, for the traders that kind of religiously watch this program. I also, on a personal note and on behalf of France as well, would like to thank everybody for your kind comments on YouTube. And a lot of the people, either in emails or in the comments, are saying, like, I'm using this as a tool. I like to see how you guys analyzing your trades. I like that you show your mistakes. I like that you give us kind of like the systematic way of how to think about my trading and how to improve it. And that's the goal of this series, and that's exactly what it's supposed to do. So we are extremely pleased with that. Stay with us over this kind of like mini summer break, and then we'll definitely have some extra episodes for you. And then when we come back, we'll have more trades. Franz, do you have any thoughts on that?
Well, I think it's the whole point of what we're doing is to help people see the mistakes that we're making, and hopefully we're all learning from them and we won't be as prone to repeat them. So, the idea, like you say, is to make everybody better at this craft, at this very difficult craft.
Yeah, absolutely. Well, today we are going to go through the market outlook. So let's get to it. So here is our view. And Franz, why don't you just start with the top four, which is the markets, and let me know which market you would like to go to.
Well, why don't we take the obvious winner of the race so far, which is the NASDAQ 100.
Mhm.
So is this on you or is this on me, Roman? I didn't quite understand.
Please start, and I'll add what I'll add something else to that.
Okay. Well, first of all, we have obviously a breakout from this trading range. First conclusion. So we are in a trending environment at this point. We've gone through a nice trading range, a nice cause building process from the peak back in February. And that's, I guess, the first observation. Markets spend time both consolidating, and trending. And here we see an example of both. We see coming into this an uptrend. We see the consolidation period, and there just a whole world of information that we can take away from what happens during the consolidation and then the trending. So I guess supply and demand, which are the two major forces and the first rule that Richard D. Wyckoff has proposed in a trading range, it's the fight between the two that determines which is going to become the dominant factor that then powers whatever trend is going to develop. So obviously we've got, coming into this, a buying climax back on February the 10th or thereabouts, and it's kind of an interesting climax in that there's where you've got it at the top of the trend channel there. It actually that is potentially where the climax actually happens, because you can line it up with the volume and see that the next after the automatic recovery or automatic reaction and the change of behavior, which we define as the biggest change in movement, the biggest downturn, the biggest reaction in the previous uptrend. We then have a slightly higher high, but if you look at the volume signature of that higher high, it shows a loss of momentum, first of all, in the spread of the individual bars, and the decline. If you look at the level of demand as this is occurring, we can see that it's diminishing. So we see that this pretty much sets the stage for phase A, and we can see that we're basically done with the previous uptrend, and we're heading into this consolidation period. The down reaction that occurs from about the middle of February through about the middle of March has a fairly aggressive tone to it. In the initial part, we can see supplies increasing. We can see that there's quite a bit of volatility on the daily bars. There's a fair amount of supply, a fair amount of selling going on here, and as the selling is sort of expended, we can see around the beginning of March kind of the classic stopping action that happens where supply and demand are getting back in a, I'm not going to call it a balanced situation, but where supply is being kind of overpowered by demand, and it creates the opportunity for price to move up, which it then does. The initial recovery takes us back to about the halfway point of the trading range, and we can see after that there's an additional attempt of supply to push us back down again. So what's going to be the result of that? And we can take a lot of knowledge from what just looking at the chart and seeing, well, what was supply actually able to do here? And you can see, number one, it's less. Number two, it doesn't have the ability to push price back down. And from that, we might start to draw, although it may be still too early, but we might start to draw some kind of a conclusion about the overall bias of this trading range as it's developing here. After that little reaction, then we run up and we do up thrust action, because we do exceed the previous high of the trading range, and it happens on pretty nice action there. There's those first three bars after that breakout show good buying, even though the level of buying is not all that great. If you look at the volume signature, there's pretty good ease of movement. So there's some takeaway from that, but the amount of demand involved is not possibly enough, especially in light of the recent level of supply, for us to conclude that maybe are we ready to completely move out of this trading range yet, or are we going to do something towards the top and then have a reaction? So that's what happens. We have some additional attempts to push higher, but we can see that supply is coming in there. There's like 4 bars at the top of fairly reasonable supply around the 19th of April that are attempting to prevent price from moving up, and they succeed. So we have another reaction that starts around the beginning of May. If you compare the couple things that we might analog there to see what's going on with this reaction, the first would be, what do the individual bars look like? What's the spread? And compare it to the first reaction back in mid-February. We don't have quite as aggressive supply even on this, or quite aggressive a downtrend as a reaction in this particular reaction here, and it doesn't go even to, it makes an even higher high. So at this point, we can see that supply is attempting to push price lower, but it's not succeeding. More stopping action, and then we begin, and maybe you want to take it from here because I've been doing all the talking, but we begin the uptrend that takes us out of this trading range.
All right. Well, I'm going to become a teacher a little bit here, Franz, if you don't mind. So first of all, this second test right here, is this our phase C?
I would define that as phase C.
Yeah. So this becomes B. So the question, because you are describing what you're seeing on the chart, which is all, an accurate description of what has happened. So the question is, what do you think is going to happen next?
Mm-hmm. And what phase C is going to show us is as the final supply comes in, the final kind of desire by sellers to get out of this, whether they're, or to sell short or whatever their motivation is to sell, is to see what is that supply able to do. And in this case, the conclusion is that it can't really push us down even to the support level. It's reversed. And I think the conclusion is that we're going up from here.
Okay, so we are going up. What happens here? What do you think is going to happen next?
Well, we see that if we look at the kind of the move of the bars themselves, as the bars themselves are becoming sort of less, the spread is becoming lower. We're seeing some decline in demand. So I think the conclusion here is that we're a little bit vulnerable, that potentially we may have a little bit more testing, but we're certainly not violating any of the channel. We're not seeing a large amount of supply coming in. It's more like demand is temporarily maybe a little bit exhausted, and we need a little bit of a rest. So I think maybe a little bit more sideways, a little bit more, maybe down into the, I don't know that we go all the way down into the body of that bar around the, what is it, around the 20th or thereabouts, but
okay. Well, I think, when we ask ourselves a question, I mean, obviously, the description was good and correct. So we kind of going through this whole trading range. But the ultimate question is, what's going to happen next? We can't really say what's going to happen next because we can't really predict. We only could outline different scenarios. So in the scenario that we're describing right here, if this is phase C of a reaccumulation, is that we are currently in the sign of strength type of rally. So let's just start from that assumption. If we are in a sign of strength rally, then we need to have some kind of conclusion to this rally. So Franz started to describe, the conditions that are currently occurring on this rally. So what are the conditions? We see all of the breakout bars, those big bars, they are starting to diminish in the spread. So the up spread is diminishing. So this suggests diminishing momentum characteristics behind the diminishing demand character. And we kind of saw it here and here as well. It's not like the demand is very aggressive. But with that, we're seeing how the upward result is slightly diminishing. So it takes us almost the same effort to produce less result, deterioration of the demand. As demand is deteriorating, we're thinking that we are somewhere close to the end of this swing. Excuse me. So what do we need to see the end of the swing? We need to see some kind of change of behavior that will come with the increased supply and increased downward spread. And that's what we're looking for to see for the end of the upswing. So something like this, for instance, where we are starting to see more consecutive number of bars to the downside, that's number one. Secondly, they are expanding relative to the bars that we've seen before on the way up. This is also a really good example right here, all of the down bars, and then suddenly this big bar. So this big bar is a change of behavior bar. It just basically suggests that now not only demand deteriorated in this area right here relative to the momentum that we had before, but also supply has come in and started producing the result to the downside. This is what we're looking for in the context of the structure that shows a potential phase C and a sign of strength rally. Okay, well, what would it mean? Let's just say that we have maybe after this a bar like that. This bar would act as that change of behavior. After the sign of strength, we would go into backing up action. So then the next step is just to think where the backing up action could go. We need to define all the levels of the support. And here they are. So here is our first target. Here is our second target. And here our expectation is that there's going to be some kind of stopping action as an automatic reaction low. And then from here, we should recover. And if we're recovering, then we will be thinking about what kind of character and what kind of result of that recovery we're going to have. And that's how you guys should be outlining this type of the scenarios. I'm not going into a bearish scenario, which you should do as well. But at least for now, you should be thinking we're still in the upward move, and then a backup action might come, and it might look this way. Okay, I think that's it. Okay, so let's go to something else. S&P front seems to be just like a steady uptrend, higher highs, higher lows. I don't see anything specifically like changing here. We could talk about maybe just some analogs of the breakouts out of the apex formation that we see here and here. So we kind of could see how the price could drift up, especially above that mean. Franz, any thoughts here on S&P?
I like the analog. I do notice, as I'm sure our viewers do, that the breakout from the first apex is quite a bit stronger, and occurs on higher demand. Even though in both cases the demand is going down as the breakout occurs, it's a signal that there's the buying is petering out a little bit. So potentially, maybe the conclusion that you would draw from that is that if supply does come in, maybe the reaction might be a little bit more, prone to push prices back down, or we could continue to drift up like you mentioned as well.
Okay, let's go to Russell. And our first assumption with Russell, because we've just ended the uptrend, let's say going into February, is that this is a reaccumulation, and this is very important. The next phrase is going to be very important. To be confirmed or to fail. So we're looking through this consolidation for the evidence of one or another. Do we have bullish evidence here, or do we have bearish evidence here? And that evidence might come in a different way. It might come in the way how the price behaves, or it might come in the way how the volume behaves. And here we were talking in WMD with Bruce yesterday about this. I think it's very important to note that the bars at the bottom are showing us, those reversal characteristics where supply is increasing and then demand is increasing at the same time. Supply is increasing, demand is increasing at the same time. And it just goes on and on and on and on. And it suggests that they were buying at the bottom of the support, which then moved to slightly higher level. And that suggests absorption, 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 absorption at the support. And now we're just dealing with this potential breakout. Could we break out of here? And I think it's not that supply is strong. I mean, looking at this supply, this is the lowest level of supply in this whole trading range. So supply is definitely exhausted. I think it's more about availability of the demand. Like, what is demand strong enough for us to get the price out of this formation? And I like how France is holding here, so it's not really reacting down, but it might take a little bit more time, to actually break out. What are your thoughts on this?
Yeah, it looks a bit like the setup that the NASDAQ 100 had before it broke out. Although it's a longer cause, it's a larger cause, but on the NASDAQ chart, the last reaction came back basically down into the middle of the range. We did have an increase in volume, made a higher high, and so potentially it might be just lagging the move that the NASDAQ 100 has already had, potentially, although we don't forecast, we don't predict.
All right. Okay, we're gonna leave the dial off, so let's just kind of move on. Let's talk about gold. So, yeah, gold is definitely very interesting, enigmatic asset right now. It's all about this drop right here, which was obviously related to the US dollar, but was somewhat unexpected in the way how it unfolded. And it just breaks the structure. It breaks the bullish texture of this rally, and it suggests some short-term weakness. So I'm not sure how to trade this, how to do this. My only suggestion would be go to the lower time frame or go to a much higher time frame. And on a lower time frame, you have kind of like weakness throughout. You have lower highs. You have a spring type action test, and it looked like it was going to go up, but then a break. So, Franz, what do you think?
Yeah, with a spring, with a true spring, we'd like to see obviously the ability to take us up and out. If we're identifying this as a phase C and an accumulation in this case, we would want to see the ability of this spring to then subsequently move price up and out of this trading range. It seems to be having a lot of difficulty. And the other thing that we've kind of seen in some previous studies of sort of distribution ranges is the inability of price anywhere along the trading range to move back up into prior zones of selling. And if you look across here, we've got that zone of selling around the 17th and then the big one on the 16th, and we really haven't had any ability at all of price to move back up into that area and show that there's that there's buying involved here that's able to overcome that.
Yeah, so I would definitely either trade it from a very short-term perspective, so just intraday trade, swing trade this. If you're already in the very long-term position, you're just holding here. I mean, like your capitulation is somewhere way below. And just if you, like Wyckoff would say, what was the phrase, Franz? When in doubt, do nothing.
Yeah, when in doubt, stay out.
Yeah, stay away. There's no reason for you to think that you either could be lucky or that you know what's going on. Just have a courage to acknowledge that you don't know what's going on and go away. And that's it. That would be an advice. Okay, let's do oil. So it looks to me like this trend that we've talked about in oil still materializes in the up movements like this. We still have to see what kind of close we're going to have. If we were to close like this, It's still a breakout, maybe not as favorable, so there is some kind of supply signature. Maybe something like this, but also could be the end of the upswing. So we'll just have to see. Franz, what are your thoughts on this?
Just a very small trading range going on here. This at the upper level there. That you know, right now we've got a potential breakout or a potential upthrust. We just have to wait and see what happens.
Okay. All right. Let's go to Bitcoin, and that probably would be it. So let's not do the treasury notes. Okay. Well, we were labeling the range like this. So phase A. By the way, there are quite a few wrong labeling that I see on Twitter. So please make sure that you do it correctly. You have to have the stop in action, automatic rally after that, which is going to be a change of behavior type of rally. And then the secondary test is the test of the local stop in action. That's very important. That's your phase A. Excuse me. Then, a sprint type action in phase B, which leads us to an upthrust. And then we go into another sprint and a test of the sprint. And we said that the most important bar for us is this one right here. It's the last capitulation bar. And we want to make sure that we overcome and we commit above this and we hold. And we were trying to do this, and we were kind of on the intraday basis upthrusting this level. But we didn't commit above, we didn't hold above this level. And that still shows short-term weakness. And as a result of it, yesterday and today we have a day where we are negating the last bar, and we're intruding now into the big bullish bar that we had of the test. So what is it? We still have to see what this could be. And I think it's very useful here to think in terms of scenarios. So what would be a bullish scenario right here? Well, stop, and there are actually could be several. So we could, let's say, stop within the body of this bar right here, and then start going up into a sign of strength. So this would be the most bullish scenario. The second bullish scenario is that we still continue going down, stopping somewhere here at around 30, and this is just becoming, a more complex trading range at the bottom. And it's complex because of the underlying weakness that we have. Okay, so those are bullish scenarios. Could we have a lower low in this scenario? We probably could if we would just take into account the sprint also as kind of like a whole trading range. But we have to stop here. We cannot go below, let's say, like 27 for the worst bullish scenario, and just have its own smaller trading range, something like this. That could be a possibility as well. All of the bearish scenarios, which is a redistribution, and initially this is what we need to think about when we come, from the downtrend here. Redistribution to be confirmed or to fail. So where is the failure or confirmation? Well, this rally right here suggested that supply was exhausted, and we could see this in the volume signature. And then this reaction right here and this sprint and the test into that still gives us an idea that there is an attempt to change the behavior. So we're saying that this is a sprint to be confirmed, and confirmation should come again with the commitment above the 36 levels. So 36,000 is an extremely important level right now in Bitcoin. So we're just kind of like watching it, and let's just see what happens. So, Franz, what are your thoughts on the daily structure of Bitcoin?
The what was the upthrust a couple days ago potentially is a last point of supply, or it's just, you know, a complex, because the amount of supply is really not, I mean, it's actually going down, at least for now. So it's more like demand is the question. You know, is demand going to be able to reverse this and move it higher? But if it can't, then if this breaks, will that draw out more selling? And I guess that would be the bearish scenario. Because right now the selling's not that pronounced and not that present.
Yeah, not that aggressive. I mean, we could, and it depending on how today is going to end, and we still have quite a lot of time to go for today's day, for today's bar. This is the bar, this is the bar, and today's bar. These are the three bars that we should compare to each other into the end of today's bar. And we should look at the volume signatures as well and make a judgment as to what kind of effort we're going to have by the end of the day, and then what kind of result we're going to have by the end of the day. And, you know, from there, just go and construct more accurate scenarios for us. All right. Well, I think that's it for today, Franz. Again, guys, thank you so much for being a part of the Anatomy of the Trade series. Again, we're going to go a little bit into a break, summer break. We still have some episodes after this, so make sure that you tune in for those episodes. And we will come back in September. Franz, thank you so much. It's been you know, a really good school year from September to this point. And we've done so much work. And thank you guys again for supporting us.
Thank you, Roman, and thanks for definitely the teaching angle on all of this. It's just a tremendous benefit to me, and I know to our viewers as well.
All right, guys. Thank you, and bye-bye.